Hello, everybody. In this video, we are going to discuss about special features of audit of banking and non-banking. Means it will be bank related and NBFC related. This is the chapter we are going to discuss now. Firstly, we will start with the banking systems. For banking systems, the legal framework, what are the legal enactment will be there for this, why we need to consider for this audits, what are the special considerations we will use for the bank. Normally banks will how their banks means here the simply the financial systems, so bank industry means financial systems, so whoever acting like as a agent for financial intermediate in the economy like India. Now what are the main special considerations arise in audit of bank, means what are the special points we need to require to consider when we are conducting the audit. Here we need to consider firstly the particularly the nature of risk and particularly nature of risk associated with the transactions. So they have many transactions, we need to see the what is the risk there, and scale of business operations, scale of bank operations, and significant exposure which can arise within a short time. This will be another special consideration. And when that banks are always extensive dependence on IT process, so information technology, they will depend on that IT processes, they may use different softwares like oracles, and effect of statutory and regulatory requirement, so they need to follow regulatory and statutory requirements, and continuous evolving development of new services and banking practices. This is the main special considerations for when we are doing the audit. So for the audit we will conduct. Now what are the legal enactment, legal framework, principle enactment will be there. For several types we have banking regulations act, SBI act, RBI act, or State Bank act, regional rural bank act, companies act, different legal framework was there. Now for the purpose of audit we need to prepare the balance sheet, profit and loss account, and as we follow the third schedule of the act. Firstly, these banks how they need to appoint the auditor, appointment of auditor. Here appointment of auditor for every statutory bank, for every statutory bank they need to appoint more four or more auditors. They will appoint to act as statutory central auditors, whoever the persons qualified they will appoint. So they will appoint four or more auditors for their audit, for statutory central auditor. For whenever they are appointing, in the appointment letter they need to mention the following items, that is period of appointment and particulars of other central auditors, and particulars of previous auditor, procedure requirement to be complied, and statement of division of work and responsibilities among joint auditors, and scope of assignments. These are the main areas they will mention in the appointment letter. However statutory auditors, however the banking companies, whoever the banking companies is there, they will appoint at AGM, where they will appoint at AGM of the shareholder. But whereas if it is a nationalized bank, where it is a nationalized bank, then the nationalized bank will appoint their auditor based on the board of directors meeting, BOD meetings. So normally banks will appoint at AGM, but if it is a nationalized bank it will appoint in the board, and either the board either the AGM they will need to take the approval of RBI approval. So they will need to take the approval of RBI approval, they will take. Now the auditor was appointed, and whenever the auditor was appointed, what are the process of conducting the audit of bank. So the auditor, whenever the audit of bank, they will see 5 items mainly. So initially what they need to consider, and after that what he need to understanding. After understanding he will assess the risk. Next we need to execute, and next we need to reporting the matters. Now what is there in initial considerations, what is there in understanding, what is there in risk assessment, what is there in execution, what is there in reporting. Now here in initial consideration you need to acceptance and continuance. So what you need to first assess the risk, what is the risk is there, what is the critical part of audit process, and what you have need to how, and after that you need to accept the effects, decisions, planning for the audit. Next, declaration of indebtedness means the auditor the before appointing the auditor, statutory central auditor or branch auditor, you should obtain some, you need to give one written confirmation that if the audit or audit firm or family or partners, whoever the members are, do not have any defaulter by any banks or financial institutions. And after that in internal some whatever the internal assignment in bank by statutory auditors. So if the audit firm has does not have any undertaking already before appointing this auditor, you need to mention the details. And after the terms of audit engagement, as per SA 210 terms of audit engagement, we need to require for each reporting period of audit, and auditor need to appointed. Next, communication of with previous auditors, we as per class 8 part 1 of first schedule to the Chartered Accountant Act 1949, a chartered accountant in practice cannot accept the audit without informing, without communicating with the previous auditor. So first you need to communicate with the previous auditor, and next you need to plan for the audit, how we can complete, how we can draw the information, how we can document the information, what is the time extent he will check, and what is the audit procedures, accessions levels. Here they need to plan. Next, establish the engagement teams. So you need to maintain one team, whoever the person qualified and experienced professional is important for competent incomes. So first, for the purpose of conducting the audit of bank, first you need to initial consideration. In initial consideration we talk about firstly acceptance and continuance, after that declaration of indebtedness, and after that terms of audit engagement or communication with the previous auditor, and after that planning and establishment of engagement team. This is the first, this process of conducting the audit of bank. Next one will be understanding. Understanding means here understanding the bank and its environment, including the internal controls. So here you may use the 315, identifying the risk assessment, you need to identify. So for understanding the environment means bank and its environment, you need to identify and assess the risk and develop one audit plan to determine the operating effectiveness of controls and what are the specific risk will be existing. Next, understanding bank accounting processes. So how the accounting was processed, produced financial statement or operational information of management used, and he also contribute what is the bank internal controls was there. You need to understand the accounting process. We need to identify and assess the risk of material misstatement, whether do fraud or risk is there, I need to check out. Next, understanding the risk management process and how management develop the controls, and you need to use the performance indicators, what is the managing, how they are managing the key businesses, what is the financial risk, you need to check out. And here another one will be understanding the risk management. For understanding the risk management, you have subcategory, right? That means we have some process. In this process we need to see the oversight by those charged with governance. Here those charged governance means maybe board of directors, CEOs, they need to approve written risk management policies. What are their consistency will be there, what are their strategy, what is their capital strength, what is their management expertise for a different types of risk exist and different amount of risk is existed which is acceptable. And next, identification, measurement and monitoring of risk. You need to check out a risk that could be significantly impact the achievement of bank's goals. So whatever the bank goals, it will affect if there is risk is there. So the bank must have their own monitoring policy. Next, control activities. Here bank should have some appropriate controls to manage the risk, whatever effective segregations of duties, particularly between front and back office, and accurate measurement and reportings of positions, verification and approvals of transactions, reconciliations. So this must be control activities must there for the bank. Next, monitoring activities. Here, monitoring activities, risk management models or methodologies, what are the assumptions they are using, they need to assess and update the information. Next, reliable information system. So they need to maintain the reliable information system. Whatever the information they are getting, they ensure that it will be genuine. So firstly we talked about initial consideration. In initial consideration, we talked about acceptance and continuance, declaration of indefinite terms and audit engagement, communication with previous order, planning, establishment of team. After that, we started with understanding. In understanding, we talked about mainly the understanding the bank and its environment and its internal control. Next, understanding the bank accounting processes. Next, after that, we need to understand the risk management process. So in risk management process, we talked about they need to oversight by those charged with governance, and after that identifications, measurement and monitoring risk policy is there or not. After that we control activities. Next, monitoring activities. After that, reliable information systems. This is understanding. Next, in process of conducting the audit, whenever conducting, the third one will be the risk assessment. Here risk assessment means we have three. Firstly, we need to identify and assess the risk of material misstatement. Next, assess the risk of fraud including money laundering is there, and assess the specific risk. Firstly, identifying and assessing risk of material misstatement. As for 315 require the order to identify and assess the risk of material misstatement at financial statement level or accession levels. Here accession levels will be classes of transactions. Transactions means profit and loss account. Account balances means balance sheet, and disclosure means it is notes to account based on the designing and further audit procedures. Next, assess the risk of fraud including is there any money laundering. So as per ESA 240, the auditor's responsibility relating to fraud in an audit of financial statement, the auditor objective is to identify and assess the risk of material misstatement of financial statement due to fraud, so that you need to obtain sufficient appropriate audit evidence, those identified in misstatement, and to respond approximately. So for that he need to maintain the attitude of professional skepticism. Professional skepticism means questioning mind, what is happening, how it is happening. So this questioning mindset will be there for the auditors to get the information. And nowadays the RBI is guidelines like KYC was mandatory, and we issued the guidelines for KYC and on the money laundering standards. Whatever the in bank, they need to ensure that bank has established the policies, procedures and controlling for determining and recognizing the reporting money laundering. So for example, if you see AIS statement, annual information statement, so in that they will provide the information, whatever the information you have. Next, assess specific risk. Here assess specific risk means auditor identify and assess any specific risk of material misstatement at financial statement level, which refers to risk that relate to banking industry of IT thereon. Here next, risk associated with outsourcing of activities. If the bank sometimes give their some portion of work to outsourcing, we need to check out the what is the outsourcing risk will be there. So for whenever we are processing of audit, conducting audit, we have ensure firstly we have started with initial consideration. In initial consideration, we talked about acceptance and continuance and in-depthness related and terms of audit engagement and communication with previous auditor and planning and establishment team. After that, we started with understanding. In understanding, we understand with the bank and its environment, internal controls, and after that we understood the bank accounting process, and after that management process. In management process, mainly we talked about the we need to oversight that those charged with governance and identification, measurement and monitoring, control and control activities, monitoring activities and reliable information. Thirdly, we started with risk assessment. In risk assessment, we identifying and assessing risk of material misstatement first. After that, we need to assess the risk is there, including the prevention of money laundering act. After that, assess specific risk, is there any specific risk is there, we need to identify. Next, assess risk associated with outsourced activities. Next, fourth one will be execution. In execution, firstly we need to see the engagement team discussions. Here the engagement team should hold discussion to gain better the understanding of bank and its environment, including internal control, and assess the potential material misstatement in the financial statement. So we need to see whether they are conducting some decisions, some meetings. Next, response to you need to prepare response to assess risk. Whatever the risk you are assessed, for that we need to respond. How we can respond, we need to prepare that as per SA 330 auditor responses to assessed risk. Next, establishing the overall audit strategy. Establishing the overall audit strategy means as per SA 300, the planning and audit of financial statements state that auditor objective of auditors to plan the audit so that it will be performed in effective manner. For this purpose, you need to establish overall audit strategy and prior commencement of audit involving key management team. Who is the key management team? And then you need to ensure some appropriate specialist will be engaged for this. Next, audit planning memorandum. We need to determine some audit materiality planning. So many what is the materiality was there, and we need to expect the scope and extent of audit procedures. We need to highlight the all significant issues whatever they are providing, and for that we need to provide the evidence. So determining the audit materiality. Here materiality means you need to see the relationship between audit materiality and audit risk. So whenever we are conducting the audit, so in determination of audit materiality is how we can get this audit materiality. For it is a professional judgment. Auditor will decide based on the whatever the knowledge he is getting, whatever the assessment he has done, based on reporting requirement is there, based on that he will come with the conclusions. Next, considering audit going concerns. So with this going concern normally consider for every reporting days. If there is any significant cost, that events or conditions that may cast significant doubt on bank ability to continue as a going concern, you need to report that matter. So we started with initial consideration, after that understanding, next risk assessment, next executions. In execution we started with engagement team discussions. After that we need to prepare response to assessed risk. Here we talked about SA 330, and after that establishing overall audit strategy. Here we talked about 300 audit plannings and audit materiality, determining audit materiality. Here we talked about audit materiality and audit risk, whatever the audit risk. Next, considering going concern. For going concern we have SA 570 going concern standard. Next, last one, reporting. Here reporting means independent audit report and whatever the LFEAR or report any other matters of bank or regulatory or government. So we will get more information on SA 700 series. Now this is process of conducting the audit of bank. Now we should know about the special considerations. What is the special consideration in IT environment? Why? Because we started with banking. In the banking, for the special consideration in bank, we said one point, that is like extensive dependence on IT to process the transaction. So banks are extensively dependent on IT to process the transactions. So we need to, the special consideration will be given to this IT environment. Now for this, how sharing of information with auditor. Now considering importance of IT system in preparation and presentation of financial statement, it is imperative that banks should share detailed information with the auditors. Whatever the information need to share the bank for the auditor, the main information, this will be the main information bank need to share. First one will be overall IT policy and structure of bank's IT systems. So what is the overall IT policy there, how they are structured, how the environment will be there for this bank IT systems. Next, how they are processing their data, how they are interfacing using under various systems. So how the data processing, how the data is interface. Next, data integrity and data security details. Next, controls on recording of various e-banking and internet banking products. So you need to check out the what are the controls is existing for various e-banking or internet banking products. Next, MIS report. MIS report means whatever the total client data or total information data you will get, what are the major exception reports and their process of generations. Next, process of generating various information related to disclosure in financial statement. So these are informations considering importance of IT systems. So in IT system is important for the bank. So in the preparation presentation of financial statement, so that bank need to provide detailed information with auditors relating to overall IT policy and structure of bank and data processing, data interface, data integrity, data security details, and how the recording of various e-banking or internet banking controls and MIS report and major exception reports. Next, process of generating various information related to disclosures in financial statement. Next, after that, what are the key key security aspects here? Key security aspects controls that auditor need to address when undertaking audit in computerized bank. So here the bank has fully in computerized bank is using fully computerized. What are the control aspect the auditor need to check out? Now for that, he need to ensure that authorized accurate complete data, authorized accurate and complete data is available for processing. So the bank is processing the whatever the information it is processing, that information will be authorized, accurate and complete data was provided for processing. Next, it will ensure that in case of any power failure, or system was restarting without restarting the records, if the current was gone and afterwards current was came, the power failure, whatever the information is there, without distorting the records it is restarting. So it will ensure that system prevents unauthorized amendments to programs. For example, bank interest was kept 8%. So one person who is related to the party customer, you want to change that rate 6%. So the bank should not allow this unauthorized amendment in the programs. So we need to ensure, auditor will ensure. Next, after the ensuring, we need to verify the some data. Verification here, segregation of duties is ensured for granting system access. So whenever the system access is providing for that persons, we need to check out the segregated, whatever the duties they are segregated. Next, what are the changes made in parameters or user levels or authenticators, whatever the changes was happening, the changes have authenticated. And verify the exception reports are authorized and verified on daily basis. So need to check out the daily basis, they are they are verified or authorized the data. This is the main important. Next, internal control and in certain selected areas. So we need to check out the information. So internal audit and inspections was there, and here internal controls in some certain selected areas. So we need to check out what are the areas and what are the examples of internal control in we will check out. Here I will go with the exam point of view. What are the main areas for there? I will cover that one only. So firstly, cash. So a bank has many cash. So main area will be bank. So here we need to check out cash should be kept in joint custody. That will be kept in joint custody of two responsible officers. In addition to normal checking by chief cashier, cash should be test checked daily. So they will check out the daily basis. Also test check here, test check in middle of the day at 3 o'clock or 4 o'clock you will come and test check the data. Next, cashier should have no access to customer ledger accounts and day books. So who is collecting the cash, he should not have access to customer ledger and day books. So that if we went for any bank withdrawals, you need to fill the one form, and that form will be given to one person. He will authorize it. That form will be given to cashier. Cashier will give the cash. So cashier will do not have the access to customer ledger accounts and day books. Next, payment should be made only after vouchers passed by the authorized officer. So whatever I said now, that authorized officer first you need to verify and check out, and he authenticated with the his sign, and he will give that receipt to cashier. Cashier will give the cash. Next, if it is there any high value of cash receipts, and payment should be verified by higher officers. That is the main area. After that, mainly these loans and advances. Loans and advances, how the loans and advances was there. So in loans and advances, bank should make advances only after satisfying itself about some credit worthiness of borrower and after obtaining sanction from the proper authorities. So advances, whenever the bank is making advances, you need to satisfy about the credit worthiness of borrower. You need to check out the credit worthiness, and after obtaining the sanctioning from proper authorities. Next, all necessary documents should be executed by parties before advance are made. So whatever the document they are providing, the document will be executed and check out. So documents will be agreements, demand promissories, notes, letter of hypothecations, etc. And sufficient margin should be kept against securities taken to cover decline in value. If it is have value, they need to check out whatever the security was provided, sufficient margin is there or not. Next, all the securities should be kept in joint custody of two responsible officers. So they must have two keys for them to open the locker, and all securities should be registered in name of bank. So whatever the security is there in the bank, that securities name will be in the name of bank only. All accounts should be kept within DP, that is drawing power, and sanctioning limits. Additional temporary limit may be sanctioned for maximum 20%. If any person is asking with existing limits, they may give 20% extra limit, temporary limit, and for 90 days tenure. And all accounts which exceed the sanction limit or drawing power should be brought to notice of management regularly. So whatever they are sanctioned, the sanction was exceeded, whatever the DP also exceeded, the type of accounts will noticed by the management regularly. Next, operations should be reviewed at least once in every year. So whatever the operation they have, they need to ensure every year. Next, after that, credit card operations. Here, credit card operations, there should be a system for effective screening of application with reasonable good credit worthiness. So effective screening of application will be required. Next, strict control over storage and issue of cards. So whatever cards they are issuing, the issuing cards will have strict control, and prompt reporting was there by merchants of all settlements accepted through credit cards. So merchants, whoever the merchants, they need to confirm the status of unutilized limits, and ensuring statements are sent regularly and promptly by these merchants of all settlements, whatever they are accepting. Monitor and follow up customer payments. So all whatever the amounts promptly paying or not, monitoring or not, what is the follow-ups. So we need to ensure follow-ups for banks, monthly follow-ups. Next, identification of payment overdue beyond reasonable. So we have payment overdue was there and that was beyond reasonable period. We need to identify that type of accounts. And periodic review of credit card holders account. This is the main area. Here they provided an example. While doing the audit of branch of XYZ bank for the year ended 31st March 2023, it has seen that the stock statement with the same figure are submitted by borrower month after month with a change in the month at the top. So they are providing the bank statement with the same figure, they change the month. These are just filed for formal compliance. Such things happen because a responsible officer does not check the stock statement and get them entered in the system, so which is lapse in internal control. So this type of transactions show that the internal controls was fail. Due to such lapse, neither the borrower nor bank staff take it seriously, thus posing the risk of loss to bank. Now, come to main area, core area, compliance with CRR and SLR requirement. What is there in this CRR and SLR requirement? That CRR means what, SLR means what. CRR means cash reserve ratio, is specified minimum fraction of total customer deposits which bank have to hold as reserve either in cash or deposit with RBI. Simply they have total customer deposits. For the total customer deposits, they need to maintain some amount, they need to hold some reserve either in cash or in deposit form. That is CRR. Next, after SLR will be simply statutory liquidity ratio. Here the requirement that bank is required to maintain in form of liquid asset. Liquid asset means that will be gold or cash, and government approved security before providing credit to the customers. So CRR means simply this is the specified minimum fraction of total customer deposits. So we need to see the total customer deposits and which bank have to hold. So for this total customer deposits, they need to hold some reserve. In either cash form or in deposit form, that is CRR. And after that the SLR means simply requirement of the bank required to maintain in the form of liquid asset. Here liquid asset, the liquid asset means it may be cash, it may be gold or government approved securities before providing credit to customers. Now, for what are the special points for maintaining this audit of compliance with this CRR and SLR? So whenever we are conducting audit, we need to consider some special points while checking this CRR and SLR. What are that? Audit procedure. Firstly, we need to verify compliance with SLR requirement of 12 audits, that not being the Friday, not being the Friday. We need to check out 12 odd dates not being the Friday. Next, after that, we need to obtain understanding of relevant circulars or instructions of RBI, whatever the circulars they have and whatever the instructions of RBI we have. We need to check out that. After that, we need to examine the consolidation regarding the DTL, that is demand and time liability position prepared by bank with related returns received from the branches. We need to examine the consolidated relating to DTL. Here, examine whether consolidation prepared by bank including information of all branches, so we need to obtain the relevant circulars was provided, and for that we need to request the branch to send their weekly trial balance like on Friday, and this consolidation of head office will be done. The DTL position we need to check out and in DTL computation. So we need to check out the DTL now. In DTL position, how we can compute this DTL positions and what are the items we need to include, what are the items we need to exclude. So for DTL, that is demand and time liabilities, in computation of this DTL we need to exclude from liabilities, we need to exclude some from liabilities. What we need to exclude from liabilities? What is the paid up capital we need to exclude, and reserves we need to exclude, and loans taken from RBI we need to exclude. So firstly, for example, if we see balance sheet, in DTL position we need to exclude paid up capital and reserves, and loan taken from RBI we need to exclude, and part amount of recoveries from borrowers in respect of bad debts. So we have some bad debts, for the bad amounts we receive part recoveries, we need to exclude this amount also, and amount received against import bills in Indian currency. We have some import bills. For these import bills we have received the amount against these import bills have in Indian currency. This amount also we need to exclude. And after that, unadjusted balances for agency business. So agency businesses we have some unadjusted balances, we need to exclude the amount also. And after that, margins held in sundry deposits for funded facilities, we need to exclude the items also. And what are the items we need to include now? So we need to include like the amounts. We have net credit balance in branch adjustments accounts, we need to add this amount. And we have some borrowings from abroad, so that borrowing from abroad we need to include these items. So whatever the items we are included, whatever the items we are excluded, whatever the part amount of recoveries for borrower in respect of bad debts, we need to exclude that amount. And whatever the amount we are receiving now, that amount reason will be we have some import bills in Indian currency, that amount we are receiving. Either unadjusted balances for agency business and margins held for in sundry deposits for funded facility. And specifically for we need to include net credit balances in branch adjustment accounts or borrowing from abroad, we need to include. Next, after this TTL position, we need to verification of some assets. In verification of assets, we need to focus mainly on this cash we are explained, bank reserves, others balances, money, short terms investments. So firstly we talked about amount whatever we have, cash balances and what is there here, we need to recognize it. Here the main part for this, we need to check out the like in classification, shifting, valuations, specifying. So main area will be advances. So here the advances. For this, you need to check out first third schedule of the act require classification of advances. Classification of advances. For this, what are the just a second substantive examination, physical verification. These all are audit approaches. You can check out, no problem. So advances is the main area, core area. So I will explain the advances area. Now advances. At approach for this advances, we need to check the what are the periodic. We need to check out the amount. What is the amount is included in balance, amount due, amount due in the bank appropriate supported by loan documents unrecorded. This also you can study on your own, no problem. We will start with one substantive audit procedure. Means simply this substantive audit procedure means you can study on your own, that cash, advances, investments. Substantive audit procedures. Substantive audit procedure here, we need to verify the correctness of master data of loan account updated in CBS. So you need to check out the correctness of master data of loan account updated in CBS. Next, you need to check out some parameters. What are the parameters? Like installment, EMI, rate of interest, tenure of loans, etc. Examine all large advances, while other advances may examine on sample basis. So you need to examine the all large advances, whatever the large advances we have, and other advances we need to example on sample basis. Examine identified problem accounts which are not yet slipped into NPA category. So what are the accounts we have? The accounts the identified some problems in accounts but which are not slipped into NPA. Next, examine the accounts which are adversely commented by the concurrent auditor. So regularly the banks was conduct concurrent audits, internal inspections, RBI inspections. We need to check out any comments was mentioned about the accounts. Next, examine the restructure accounts list to ensure the restructure as per RBI guidelines. Verify completeness and accuracy of interest charge and carry out the appropriate analytical procedure for these cases. Next, after that, recoverability of advances. Recoverability of advances means here we need to check out review periodic statements submitted by borrowers indicating compliance with terms and conditions. We need to check out the periodic statement, and after that we need to review the latest financial statement of borrower. Next, review the report on inspection of security and review the auditor's report of borrowers having credit facility. Next, here example 3. FT Cooperative Bank lent housing loan of 1 crore. How much housing loan? 1 crore to Rahul for under construction of flat. The project was still incomplete and the builder absconded. So now the builder was absconding, means he went away. It turned out that the builder has taken loan from another bank for the entire property on the basis of equitable mortgage. So the same property, entire property, he is kept in mortgage with other bank. Since equitable mortgage is not registered, FT Bank was unable to trace the loan taken by builder, and therefore the borrower Rahul and FT Bank both suffered. So whoever the person taken the loan and the FT Bank was suffering now. It would be better idea to first approve the builder after thoroughly examining his credentials, past performance, etc., and then only consider giving loan to buyer of his flats to minimize such risk. So this type of you cannot see your customer, you need to see the customer's biller's data. In fact, many banks nowadays to do this, so they will see like whether they will registered in some act, is there real estate act, I forgot that act, I think REIT real estate act is there, they whether they are registered with that act or not, they will check out. And after that the given, then only consider the giving loan to buyers of flat to minimize the risk. In fact, banks nowadays doing so. FT cooperative banks did not take the precautions and landed in trouble. So further CIBIL record of the builder also could have to be checked. Loan sanctioning should not become a merry tick of the box. So if you are sanctioning the loan, it is not simply ticking the boxes, you need to check out the information process. Next, verification of asset classification, income recognition, and provision for NPA. This will be taking in next class.